getting into some definitions here, these play a part, I would say, in the compensation philosophy. We talked about the example before of perhaps a company saying on a cash compensation basis, we want to be at or slightly below the market, and then factoring in the long-term incentive plans. So it's helpful, I think, to have a couple of definitions. If we're talking about total cash compensation, and we'll go through some examples here in a moment, we're really talking about annual bonuses and annual incentives, period. So it's basically what shows up on your Form W-2 at the end of the year is what we're referring to as cash compensation. And then if we factor in long-term incentive plans, whether those are things like phantom stock, stock appreciation rights, programs, et cetera, that will come up or bubble up into what we call total direct compensation. So just want to clarify a couple of terms there.
But it's a question for you on that front, right? Sometimes you may have, right, base comp maybe lower than market, but then once you include annual bonus, it could be something that kind of, pushes people back up to market. So it's important to know the pieces, right, and how everything kind of fits in.
Exactly. Yeah, we'll talk about that a little bit more as we go through some examples here. But to your point, Franco, I think it's important for a company to say, we want to pay more for performance, and we're seeing a trend in that regard where companies are interested in this split between base comp that's quote unquote guaranteed versus annual incentives that are based on performance pools, or there's various ways of structuring the incentive. And but yeah, certainly the trend has been more towards that annual incentive, and that's where I think this benchmarking and the way that companies go about benchmarking can be helpful and informative to a compensation committee. So these are the factors that when we undertake a benchmarking exercise, these are the main factors that cover the market compensation. I would say among these, the size generally has the most impact on executive compensation. So oftentimes we'll run these at not only the size of the company today, but where it might be in the future, so that they can see the sensitivity of compensation as it pertains to the growth of their business and really where they're trying to get to. The other thing I would mention here on this slide is with that job title and description, that titles can be a tricky thing. And Franco, I'm sure you see this with many of your clients, that the executives can wear different hats. And so in those situations, I think there's oftentimes a blending of different positions where multiple hats are worn. So while you may want to take into account the job description that a particular market research point may have, it's important to compare that and make sure that you're comparing apples to apples.
Yeah, no, for sure. And I think, from a contractor's perspective, there could be situations where, let's say a company's headquartered, general contractor's headquartered in Chicago. Right. We have the geography, we have the service lines that are GC, say for the, commercial sector, but they're looking to grow. Let's say they're looking to grow to Phoenix and, provide GC services, but also maybe dabble into some self-performed concrete work. I think in that situation, kind of what you have highlighted here, you need to, make sure you include those factors, because what you're compensating folks here in Chicago may be very well different than what you need to compensate folks to recruit and retain down in Arizona as part of your growth plan. And so, like, everything here that we highlight, I think is key, just to ensure that, make sure that you're competitive out there in the industry, because again, what's good for you at your own kind of backyard may be different in other places. So just be proactive on that front.